Welcome back to the Credit Repair Show. I'm your host, the Credit Doctor Angelo McCutcheon, coming to you with another YouTube video on the credit repair process. Once again, I want to thank all of my subscribers, all of you guys who come on. And if you haven't subscribed already, make sure you please hit that subscribe button. Hit the notification bell, of course, so whenever we go live, you will get the notification. All right, and leave a comment on what you think we should talk about or on the topics that we have been uh, talking to you guys about. So today we're going to be talking about medical debts in reference to your credit report, how bad medical debts are, and medical debts being one of the biggest things that most consumers deal with when it comes to cleaning up their credit. It is a big problem in the credit reporting industry, and medical bills happen because a lot of times people who go to the doctor or go to the emergency room or go to the hospital, and they may have insurance, and they feel that the insurance covers the majority of the bill. They pay their deductible, and then they go home, get well, get better, and then within a month or 2 months, sometimes 3 months, they'll get a bill saying that they still owe a certain amount of medical debt. And then they're asking, where did this come from? My insurance covered the debt. I paid my deductible. Where did this come from? And this happens a lot within the medical field. And people who have seen or had medical bills know that this happens. A lot of times, doctors double bill patients, hospitals double bill patients. Sometimes you're in an emergency room, you're in a hospital, and a doctor comes in the room, just say how you feeling. You say your arm is feeling much better or your leg is feeling much better, and then they walk out. It's not even your primary doctor. It's another doctor who comes in and maybe specializes in legs or arms, ask you a few questions, walk out, and that you're getting a bill for $5,000 just because he walked into the room and asked you a couple of questions. And then those are the ones in which your insurance doesn't cover, and you paid your deductible, and you didn't know you was going to get hit with this. And it's things like that that's constantly making medical debt a big thing in this country. It's even so big to the point where the Consumer Financial Bureau, Protection Bureau, came out with a finding, a summary, a study. And it's a lot of pages long, so we're definitely not going to read that. But I'm going to go over some of the key findings of that report so you can understand just how bad medical debt is. Now, when we talk about medical debt being on your credit report, remember, anything that goes on your credit report, according to the Fair Credit Reporting Act, it has to be 100% accurate. And also, when you understand your HIPAA laws, that even though medical debts are sold to debt collectors, they have the right to sell it to a debt collector, but with limited information. I mean, they can't expose too much of what the procedures was, what you was there for. It's basically how much you owe the hospital, and your name and address and who the hospital is, things like that. But a lot of times, debt collectors try to tell you that, hey, we know a lot about this debt that you owe. We know you went and had this done, had that done. Well, then now you're violating HIPAA laws. And so you can really actually sue them for violation of the HIPAA laws. But that's another video we will talk about. But remember, a lot of these debts and that's sold to debt collectors for pennies on the dollars, these medical debts. And then sometimes I would see some from um, Simon Agency or Aaron, I can't remember the other name, but they buy a lot of these debts, that's medical debts, that's like $5, $10, $20, $50, $100, and then they put it right on your credit report, which hurts you a great deal. Lowers your score, lowers you the ability to be able to get credit or buy a house because now you have collections and that hurts. So we need to deal with that. So let's go over, and again, I'm just going to go over the executive summary or the key findings of the Consumer Financial Protection Bureau, which came out a few weeks ago, that talked about the problem of medical debts. All right, so let's just go over this. The first one says the CFPB, Consumer Financial Protection Bureau, research shows 88 billion in medical debt on consumers' credit records as of June 2021. The total amount of medical debt and collections in the United States is likely higher since not all medical debts and collections are furnished to the credit reporting agencies. So right off the bat, 88 billion, just not counting the ones that hasn't been reported to the credit bureaus yet, but 88 billions of medical debts on consumers' credit records as of June 2021. That's a lot. Medical debts is a big problem in this country, right? Next finding says most medical debt collection trade lines on consumer credit reports are under $500. Although many people with medical debts have multiple medical collection trade lines. So here's the problem. It says the average is about $500 or under, but most consumers have more than one medical debt. So then that starts piling up. Some have 2, 3, 4. I've seen some with 12 and 15 different types of medical debt on their credit report sold to debt collectors. Next one says the past due medical debt. I'm sorry, I skipped one. Let's go back up one. As of 2021, this is important. 58% of all third-party debt collection trade lines were for medical debt, making medical debt the most common debt collection trade line on credit records. The next most common collection trade lines were telecommunication debts at only 15% of trade lines. So again, like I said, how big medical debts are, 58% of third-party debt collections report medical debts. And that is the biggest trade line of all debt collection agencies or debt buyers. The next one closest to that is telecommunication, which may be Verizon, IT, IT&T, something like that, T-Mobile, those communication. But that's only at 15%. Medical debt is at 58%. That's a serious problem. Next finding says past due medical debt reported to consumer reporting companies can appear on a person's credit report and lower their credit scores. This may reduce their access to credit and make it harder to find a home or a job. Now, that's just common sense, right? Common sense. These medical debts are causing a problem. Let's look at the next one. It says medical debt collections are less predictive of future payment problems than other debt collections are. Certain new credit models take this into account, but some widely used models still weigh medical and non-medical collections equally. What does that mean? When you have medical, remember, negative items on your credit report let lenders know that let lenders know that you are more likely or less likely to pay future debts. All right. So with that in mind, when you have medical debt, that doesn't really give them a good range of how this person will be able to pay future debts. Other debt collectors, like car payments, mortgage, credit cards will show that, hey, this person most likely will not pay their debts in the future. But medical bills doesn't really take that into account. And that's the good thing about that. But some new credit models that may be coming out, FICO 9 or FICO 10, may take that into consideration. Not quite sure yet, but that's something we'll be looking at. So let's look at the next finding. It says Black and Hispanic people and young adults and low-income individuals of all races and ethnicities are more likely to have medical debt than the national average. As a result, these populations may be more heavily impacted by outdated credit models that overestimate the predictiveness of medical debt. Older adults and veterans are also heavily impacted by medical debt. Additionally, medical debt is more prevalent in the southeastern and southwestern United States. So let's go back and just kind of look at that just for a minute. So Blacks and Hispanics, typically, right, normal, and we always get the short end of the stick, right? Blacks and Hispanic people and young adults and low income individuals, all these types of people and low income of all races, of course, and ethnicities are more likely to have medical debt than the national average. Why? Because many blacks and Hispanics do not have insurance or lack of insurance. And so therefore it hurts them when they go to the doctor and they get these big bills and things like that. They can't pay. Then it gets sold to a debt collector, and then it gets put on their credit report. So not only black and Hispanics, but then poor people, low income people of all races in that area have the same problem. Then it talks about veterans and older people. Medical debt again is a big problem, and this is coming from the Consumer Financial Protection Bureau, which is the part of the government that oversees the credit reporting industry. And this is their finding. This is what they're saying. And then the last thing, medical, it says medical bill amounts can be unpredictable and often vary widely based on patient and provider characteristics. Listen to this. Uninsured and out of network patients are often charged prices that are much higher than what in network insurers pay, even though the uninsured may have little ability to pay. The prices charged to uninsured and out of network patients sometimes significantly exceeds providers' costs. Markups are especially high for emergency care, and nonprofit investors own hospitals charge higher average markups. So basically, what are they saying here? Just to make it short, there is a difference between people who have insurance and people who don't have insurance on how they are charged. Again, this is their finding, not mine. This is their finding. And they basically said that, hey, let me use for an example. I used this before and I'll use this again. Let's say you go to the dentist, right? And because it's all deal with medical, you go to the dentist and one person has two people go to the dentist. One has insurance, one doesn't have insurance. The person who has insurance, let's say they both going for a root canal, and they tell them, okay, root canal, you have insurance, root canal is $900. All right, your deductible will be like $100. I'm just using this for an example. All right, so the person with insurance, $900 is for root canal, and the deductible is $100 taken care of in that sense. The same, another person comes in, need a root canal, but has no insurance. What they are saying is that person who has no insurance or goes to an out-of-pocket network where the insurance doesn't cover it, they go in for a root canal, and that same dentist is now going to charge them instead of $900, it's going to charge them like $2,500 for the same root canal. Just because they don't have insurance, they mark up the prices for them because they feel that, hey, they need to get this done. They may be willing to pay that much just to get it done. And so they charge a higher prices for that. And then, of course, the person who don't have insurance don't really have money, but have to get the root canal, and they end up, not making all the payments, and it goes on their credit report. It's sold to a debt collector, goes on their credit report. And this is what the Consumer Financial Bureau is saying, the unfairness of medical debts in this country, the way it operates, the way it moves, and the way it lands on your credit report. But just remember, you can get medical debts deleted from your credit report. If you follow us here, we'll show you how that can be done legally through the Fair Credit Reporting Act and the Fair Debt Collection Practices Act. So once again, you're listening to the Credit Repair Show. I'm your host, the Credit Doctor, Angelo McCutcheon. Remember to hit that subscribe button, check out some of our other videos, and leave a comment. And with that, we say you guys have a blessed day. Stay blessed, whatever you do, stay blessed. But what's even more important is that you are a blessing. And with that, we say